Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun. Good morning, everybody. The 16th of April. Sorry, I'm a little bit late. I guess I just got lost in my thoughts this morning. That night ate peanut butter for breakfast. And that always takes a long time for some reason. Anyway, let's just go look at the markets. I haven't seen anything yet. We had on the yesterday we had a little bit of a down move in the E-mini. Most of that down move, though, was in the overnight session. We recovered a little bit during the regular session. We started the overnight session selling, and now here in just before the Treasury markets open, after the Treasury markets open, retracing just a tiny bit, but still, a little bit higher than where we were regular session yesterday, but a little bit down. The Treasuries, on the other hand, they moved higher yesterday. They were flat, and they are moving higher once again. Super interesting. I don't see any real correlation there with the currencies. Maybe a slight fall in the dollar, but overall, no big deal. Pretty much where we were yesterday. So something is going on in the Treasury market. Something is definitely going on. I would also add that we are underperforming volatility. We are not moving as far as the volatility index on the ES is not moving as far as the volatility index would suggest we should. Something is wrong. In particular, this buying in the treasuries is concerning. Now, that said, the action that we have seen the past 20 minutes suggests that you don't want to touch the treasuries right now. And we have the Philadelphia Fed Manufacturing Index coming in. Right now we're expecting a negative 30, reading of negative 30. There's the release. Quite volatile in the equities there. My, oh my. And the reading is, jobless claims too. So jobless claims, we got initial jobless claims, 5,245, 5,245,000 versus an estimated 5,100,000. So a little bit better than expecting. Housing starts less than expected at 1.216 million versus 1.3 million. Continuing jobless claims, 11 million versus an estimated 14 million, so better than expected. Manufacturing sales month over month, spot 5 versus a negative spot 1. That might be what's causing them to react the way that they are. Building permits down 6.8%. Wow. Well, that's a lot. That's a lot. I still don't have the Philly number, though. Where is the Philly number? Philly.
Winston's mom says Fannie Mae says home sales will decline by 15% in 2020.
Yeah, I'm still waiting for them mortgage rates to come down. I think that if you want people to buy houses, that you're going to have to bring the mortgage rate down closer to what the 10-year is, right? Or I guess the 30-year, but you get what I'm saying. Okay, the Philadelphia Fed Manufacturing Index is a negative 56.6 versus an expected negative 30. Oh, man. But the market is up presumably because the continuing jobless claims is much less than expected. I don't know, man. When I see that number, okay, continuing jobless claims, obviously we know it's going to be a big number. Does that give me, well, so I'm trying to change my approach to markets here a little bit, if I could. Because I think that what I'm really trying to look at is how unexpected something is. So if you expect the number to be unexpected, can it truly be unexpected? And yet the market moved, and I think that when you have a large move in the markets like that, that you're saying that it was unexpected. And yeah, I don't know. It's kind of weird. We'll see what the market does with it today. Now the treasuries they fell down just a little bit, but they look almost completely unfazed by this. So I think that the equity markets might be just kind of trigger happy, you know?
Winston's mom says they are keeping the rates up just a bit higher to slow down the amount of mortgages currently being refinanced, or so I have read. Right now, they say you can make a killing if you are a mortgage guy.
Is that why they're chasing me so hard to get me to refinance? Because the number that they've given me just doesn't sound fair. Fair is a wrong word. I shouldn't use fair. It doesn't sound to me like the number I should be getting. Because I financed at like 4%, maybe 4.1, I forget. And they're giving me 3.5. And yeah. And I financed before the rates like really went up. But when they really went up, only went up to like 4.5, 4.35. Like we've come down like 10 times what we had gone up. So when we got up, they went up 0.5. And then we go down 10 times that and we only come down 0.5. Like we should be down like almost a whole point. So now I'm wondering, okay, so is there a lag to it? Like I don't know how they're tracked, but I would think that if I was a business like that I would lag it, that I wouldn't bring the number down to what the treasuries are offering until I don't have enough business to and then I need to bring it down more.
Joan Grau says CQG data feed bridge between platforms, right?
I am currently using the CQG. I am using the bridge, yes. I've tested it both ways. Can't tell a difference.
Winston's mom says I don't know, but I will go Googling your question later. I think the idea is get the customer in the door and then make them wait.
Well, what I did was I got in the door and now I'm making them wait. And I might wait a few months. Okay.
Winston's mom says you're looking for new investment ideas. Eurogen Pharma Limited. URGN, minus 14.71%, gained 10.7% in pre-market trading on Thursday after the Food and Drug Administration approved urothelial cancer treatment.
So here's another thing about my approach to markets that I'm trying to do. I think that when I look in the markets and I see something unexpected, like a ton of volume coming in, I think that means that you're already too late. I think that Eurogen Pharma being up 10% in pre-market trading on Thursday means that the trade or the investment already happened, and that if you come in and you buy it right now, that you're likely to just lose it. You're likely to just lose because you're providing liquidity to the winners. What you want to be is you want to be the one that's in there when it's just acting normal and nobody cares about it and there's nothing unexpected about it. And then when something unexpected happens, everybody comes in, you're already in and you're getting out. That's what you want to do. So I want 3 stocks. I am looking in nuclear technology, consumer discretionaries, and technology. And on the technology, I'm kind of looking more in the 5G area. So if you want to help, probably technology companies is what we should be looking at. I'll just give you a quick little rundown of some of the ones that I'm investigating. Because I am looking for 5G, so I have things kind of split out by the different, what is the word? The different sectors or types of companies that can make money from the move over to 5G. The first contingent is the chip makers. So for chip makers, I have Qualcomm, Marvell, and I forget what these guys' names are, but AVGO. They're another company that should be somewhat familiar to people. Then I'm looking at the networking equipment. So I'm looking at Ericsson and Nokia for those. The cell phone towers, American Tower. And then I also have GLW, which is Corning, for the materials that are needed for like the fiber optic and so forth. So yeah. So those are a list, and I would like to expand that list if possible, but those are kind of the technology companies I'm looking at. If I don't go in through 5G, then it might be one of like AMD, Citrix maybe. Citrix is an interesting one because they have the best virtualization technology for like remote working, and I think they do GoToMeeting, which Zoom is having trouble. So now everybody's going to use GoToMeeting probably, I would think. Now the market is retracing now. We'll see if they retrace the whole thing or what. The treasuries, they did move down from 09 to 08. Well, even to 07. So they did move down a step. But overall, you're just at the bottom of that spread, and they don't look terribly interesting to me. And I think that if I was going to make a trade in the 10-year, I would want them to reveal to me a little bit better what the bid-ask spread is right now, because right now it could be like all the way down to 6 and 10, and I don't know. That's not so right.
Winston's mom says nuclear technology. I speak to a young man online who is a physicist over in Japan. 2 postgrads and he must be an underachiever. Lol, I will ask him what he thinks.
Please do. Although I've been looking through all of the different nuclear companies, and I'm starting to think that there's only one company that actually gives me the exposure that I want. But I'm not going to share what it is. It's a secret. Not until I bought it. When I buy it, then maybe I'll tell you.
Winston's mom says 17 watching now. Please hit like for the channel, or if you would really like to make someone wait, like Speculator Seth is doing. Lol.
Thank you very much. I don't know why it took me so long to get ready. So it was not just that I sat and ate. I must have like really zoned out in the shower thinking about, what, I was reading something. That's what I was doing. I read there was this thread on Futures.io about, does order flow work? And I think it's the wrong question. To me, it's the wrong question. Like, there's this idea, if you go and you take the current state of the market and then pass it into an equation or set of rules to predict what it's going to do in the next 5 minutes, I do not believe that you can create a formula or a set of rules that can accurately and consistently predict what is going to happen. The best that you could do is you could create a set of rules that creates new rules based on what the most recent market action is, which is essentially what machine learning algorithms do. But even those get creamed, like in a time period like now, you start to have unexpected behavior, and then they lose money too. So to sit down and say, well, does order flow work? If working means, can I take order flow information and process it and make an accurate assessment of what the market is going to do, I don't think you can do it. I think the only way that you can determine what the market is going to do next is by playing the game. You have to do the calculation. That's the only way to do it. Because the input is the output from the last iteration, right? We look at the market, we look at the current state of the market, and then we use that and we put it into our systems, and then we take it through our systems and we put it into the exchange. So we're taking the output, we're processing it, and then inputting that into the next iteration. Which means when it's a fractal. So a teeny tiny little change in any one of those things, or how you react to it, or even what you do, just even your one tiny little one lot could have a huge impact on the ultimate output. Which means you can't accurately predict what the next iteration is going to do. Just like you can continually zoom in on a fractal over and over and over again. And can I predict what exactly is going to happen in a certain spot when you zoom in? I think that I could go in and I could show a picture of it and I could predict one thing about it, but then if I zoom in again, the picture will completely change and then those rules won't work anymore. Anyways, that's why I was so gone it. And when I'm looking at it now, I'm starting to think, well, I'm trying to do the wrong thing because I'm trying to find a system of rules. And even though I understand that the system of rules can change, I'm trying to create a system of rules that will consistently pull money out of the market. And it can't be done. The very mathematical nature of it makes what I'm trying to do impossible. So now I'm starting to go into, okay, maybe let's just see what kind of interesting things we can find going through the information instead.
Joan Grau says considered switching to rhythmic data for full depth. Any thoughts on market depth maps? Thanks in advance, grinning face.
Yeah, so we should really answer this question, and then I get to what you're saying, Blue Turtle. So I was using rhythmic, where you get the full depth, and I liked it. I really liked it. It definitely changed what I would see on my, depth maps. Let me show where's. Oh, do I not have it open? I guess I don't have it open anymore. I had one open for the 10-year, but I haven't been really looking at it lately. I have a ton of these things open that I don't really need. Like this can go and this can go. But I didn't necessarily find it terribly useful. I'm notice in the treasuries that when there's liquidity really far away, that it doesn't really factor into the most recent action or the kind of levels that we're looking at. It does show me orders being moved around really far away. And I do see those move at key inflection points in the market, and it kind of makes that click sound that you'll hear on this stream. So that was nice. But is it enough of an edge on its own that you would absolutely should use rhythmic versus CQG or vice versa? And I'd say it's inconclusive. You might be able to find something in it. I don't know. But this just goes back to the whole thing of like, is there anything actually to find? You know what I mean? But now the disadvantage to Rhythmic is that you can't pay for the market internals. At least with the way that I was doing it, you couldn't do it. So I moved over to CQG because I wanted to try using the market internals, and so I got the tick and so forth. So that's kind of the way that it comes down. I think there's I would really like to get the VIX live now. It's just like all those pieces of data. There's a reason why they charge you extra for them. It's because they're valuable. So it's just like everything else in the market, in the retail market. There's no one that's the one that you got to do, and that's the best way to do it, and the best way there's always trade-offs to everything. You get more levels of market depth, you don't get the market internals. Also, you can't see the exchange traded spreads with Rhythmic. Well, that's the best answer I can give you on that one. Ultimately, I don't think it really matters.
Blue Turtle says good run, dinner. My 25 years of experience can give you bad advice. Account 50K under, pick one stock. Hold, 100K, pick a few stocks and dollar cost average. No day trading, study for fun.
Sure.
Blue Turtle says only day traders I've seen make money started with at least 1 million.
Yeah, I think that if you really want to make money, that you should put money in long term. That's why when I got my stimulus money, as much as I would really love to trade it, I want to put it into the way that I best know how to get a return. And I do think that a retail trader can potentially make a better return than the market because, like I said, it all comes out down to something being unexpected. And you as an individual person that's going out and buying things actually might have a better way of finding something in the market unexpected than the professional on Wall Street does. Because they're in their little bubble and there's so many things that they don't see. So yeah. And I have seen people that are successful with a day trading, but that was just on that time frame. I'm going to bet that hardly anybody made money through this downturn thing. Man, unless you swung it and just held it and got lucky, or you did options or something, and then when it came down, you stopped trading it. We were talking about Jeffrey Gunlock the other day on one of the Facebook groups because he went short, and then he got out down at the bottom, and now he's saying that he's still unhappy with things and that he's going to go short again. And so everybody's like, well, he was right. And I was like, well, yeah, he was right about that. But now he's getting in again. So if he's wrong now, then him being right before doesn't really matter, does it?
Winston's mom says string theory. Did you have a quantum leap in your dreams last night? Quantum gravity, Einstein's second postulate, and that's the extent of my Big Bang theory.
Yeah, well, so I was watching it. I think one of the things that kind of got me on this string, aside from the Futures IO thread about this, was about order flow itself. But I'm watching, what is it called? Quark Science, I think. I think what they're doing is they're kind of setting up the foundations for certain, quark and string theory. And then maybe later on in the season, they'll get into the actual, quantum mechanics sort of stuff. But what they were talking about this time was just information. And he said that was what got me on the unexpectedness, was he was talking about this guy that worked for Bell Labs that decided that information can be most simply represented as a series of bits, true and false, and that the size of that information is based on how unexpected it is, and that you can measure that by measuring how many ones and zeros there are. And then they went through and they explained how we've actually proven that deleting data costs energy, and like they've measured the amount of energy that it takes to delete a bit. Was so very interesting to me. But it was like the information, it has a direct measurable impacting correlation in the natural world in physics. And that's where I kind of started going into this whole thing, that it's like really what we're looking for. Really, what we're all doing as traders is we're trying to data mine the market to try and find a situation where we're going to get something unexpected. We're trying to predict unexpectedness, essentially, before everybody else does.
Blue Turtle says before the big firms bought order flow and only seemed to worry about latency, not price movement. Then it was super complex stuff sold to other countries. Now I'm sure they get info from the Fed.
Yeah, well, so, I mean, I don't think that in futures, as far as I know, there's no, like, snooping order flow. Like, why would you need to? Because you can all just see it on the exchange anyways, right? I do think, although I'm not entirely sure, nobody's ever been able to give me a straight answer on this, but I do think that they can see IDs. Like, I think that when I trade my one lot, that somebody at Goldman Sachs can go in and they can see, oh yes, user 1056321 just entered in. Oh, well, we've been mean to him lately. Maybe we should let him off this time. That could happen. And we wouldn't have access to that information. If we did, it would be unfair. But
Winston's mom says, do you watch Arvin Ash on YouTube? The fundamental nature of the universe are not particles but fields. They are fluid-like substances that can be perturbed. They can vibrate and experience excitations.
Well, I've never heard of that guy, but this kind of goes back to the thing is when you're talking about a fractal system, where, and again, when I say a fractal system, what I mean is that the input to the equation is the output from the previous iteration. Mathematically, one change in the system compounds itself over time, and so it can lead to unexpected results. And by very definition, it's basically impossible to predict. You can calculate it, but you have to go through the calculation. You can't sit down and say, okay, it's 5 right now, and if I change this value by 1, then what will the output be 5 iterations from now? And is there an equation that I can simplify that process down? You can't. You have to go back through the equation to find out what the value is going to be. There's no way to reduce the function. At least I don't think there is, or we haven't discovered it. And the reason why they're interested in that is because then that goes into quantum mechanics. Because then what they can do is that you can get a qubit, and if you set the problem up a certain way, then you can have the quantum processor run through the iteration, and it knows the answer almost instantaneously. But even if we could pass the market into a quantum processor, what it would tell us would still be limited information. You would still have to play the game to know what the output's going to be, right? I don't think that all of that means that you can't make money day trading. But I do think that it does give me pause on the whole idea that I'll go in and I'll notice a behavior in the market, and then I'll back test it and see how well it does. And then if it does well enough, I'll start trading it live. Doesn't make sense because, number one, you're not trading it. So as soon as you start trading it, it's going to change the function. But then number two, because it's a continuously running function. It's just going to change, and then whatever stat that you have is going to be useless, and it's going to change, right? So trying to find a set of steps that might not be the way to go. I think there's got to be a different way to make money from it.
Winston's mom says we once received a very, very large bonus from our parent company, and less than 1 week later, we received an invitation to the White House. I still wonder about that one, and no, we did not go. Winston's mom says the bonus was not that big. We would have been one of 100s. Winston's mom says giant robot lives matter, and that would be the next generation. Will life find a way when it meets giant robots?
I see blue. I'm not going to have it read out, but I see Turtle listing out an equation for me that looks familiar, but I don't know what that is. It would probably be better to just give me the name of the equation and I look it up later, but it looks familiar. It actually really does, but boy, some of that doesn't even make sense. 0 is less than A is less than 0. It must mean something different from what I understand. Well, the market came back. They're bouncing a little bit. I do see they kind of turned up, so they might move on and upswing a little bit, but
Winston's mom says Heisenberg dynamics.
Oh, by the way, John, I'm glad that you're entertained. I mean, so here's another thing about fractals. Was the guy that really invented this science, Mandelbrot, he applied it to financial markets, and the conclusion that he came out of it was that the systems were always destined to have like a catastrophic and unexpected collapse. Oh, there was John Grau. Sorry. Not talking about you, John. So anyways, Mandelbrot, he created a model for risk that I need to read the book. His model basically said that markets will always collapse at some point. So that's the other side of it. So I'm kind of sitting here and I'm like, well, I have stuff that like I've made money on, but then all of a sudden I'll lose it. And I keep thinking maybe that's me. But then I take a step back and I say, actually, it could be the nature of the thing.
Quasar says hi Seth. Just logged in to say hi. I watch nearly every day the stream but usually not live since I'm trading bonds on my side too. Winking face.
Oh yeah, I get you. Yeah, also some people it's you know what? It's really hard to watch somebody else trade. You know what I mean? Especially when it's happening. I know there's a lot of people that watch it on replay, so I really appreciate it. But and thank you for coming in and saying hi.
Winston's mom says Mandelbrot is a cookie that is baked in a log shape and then broken into tiny pieces.
No.
Delicious almond-like cookie from Germany, I think.
You're so the guy they were talking about, Mandelbrot. This is the Mandelbrot set. Here, let's see if we can find it. Mandelbrot set viewer. Okay, so here you go. So I can come in and I can zoom in on this. So this is like a really, really simple equation that they're using to generate this. and it produces this crazy pattern, right? But then, like, the thing is that obviously there's a pattern to it, right? Here it gets bigger, and like there's the number of things are in it. But like if I just zoom in on any one spot, right? Can you predict what it's actually going to look like? Right? I might have had a prediction of what it looked like before, and now it's like a completely different thing, right? It's a completely different thing now. The deeper and deeper into it I get, I guess now I've gotten so deep that the numbers are so small that it takes it a little bit to compute. So that's what we're talking about. So if you look at the complexity of that, and this is like the most simple equation that you can possibly come up with too. Like that's the crazy thing, is it's literally like x squared plus 1, and then you just feed it back into itself over and over again. But then you think about the markets, and the markets is the same thing except for that the input, the equation is the hopes and expectations of everybody participating in the market. And we're going to sit down and say that we can make a prediction on what a system that complicated is going to do. Is really, when you look at the math of it, is quite ridiculous. Mm-mm. It's interesting the way that it does that. It's computing at different lines. It doesn't do it from top to bottom or anything like that. It's random.
Winston's mom says Mandelbrot set. And the corresponding Julia set is connected and not computable. Juliet Farad is connected and not computable also, and she is napping now after a breakfast of chicken thighs.
Yeah. Well, so I think the reason why they're saying it's not computable is because it's infinite. I'm not sure that that's quite the same thing as what I'm trying to say. But what I'm saying is that with a fractal function, it's difficult, if not impossible, to predict what the outcome is going to be. Because a small change gets enlarged. It's like if a butterfly flaps its wings in South America, does that cause a tornado in the Midwest? It's that sort of a thing. Your one tiny little one lot has an influence on the market. Your tiny little micro lot has an influence on the market. And what is the impact that that's going to actually have? Can't predict it.
Joan Grau says I.
Well, at the moment, I am starting to see a little bit of activity over here in the 10-year. I think I'm already too late. I should have bought 08. But I've kind of been watching the E-mini. I don't know. I'm kind of tempted to sell it, but I don't think that would fit in with the way things are right now. I mean, it's certainly counter to what the hour is doing.
Blue Turtle says chaos. And then maybe your trade would win in another universe. In another universe, I'm a king.
There you go. Maybe in another universe we've made trillions of dollars. No, I don't think so. Like the thing that I think is so weird about it. Sorry, you just said something and I was reading that and I lost my train of thought. The thing that I find is so interesting about it is you have a thread and they say, "Does order flow work?" And a bunch of people come in and they say, "Well, I tried it," and I say that it doesn't work. And then it's like, okay, so what are you doing that works? You using a chart now? Because I can prove that that doesn't work. You know what I mean? And where is the person, the retail trader, that's having like this massive success all the time? Because people always say, well, if you were profitable, then you would just trade that and you would be compounding your money over and over again and you'd be a millionaire. It doesn't work that way. I think that if you are successful, you've maybe made a couple, tens of thousands, and that's probably the most that you can hope for. Like what the Axie guys do. Like look at what the Axia guys do and then realize that that is like the top 0.1% of traders, the success that they have. And almost everybody else is exponentially less successful than them. Anyways.
Joan Grouse says, I feel there has been a major move from index futures traders to bonds in more slow markets.
I don't know if that's true, Joan. So for one thing, I have seen a couple of people, including myself, starting to trade the equities more simply because of the micro futures. And there's a lot of noise with it, When I look at the treasuries, the overall market liquidity is less. So we can take from that what we will. I don't 100% understand what's going on in treasuries. I have to think, though, especially over the past day, something's up. It looks like it's doing something. So I'm going to have to skip a couple of these comments and we'll just read this stuff.
Winston's mom says maybe you could adapt your chart to reflect the anti-quarks and quarks chaos and balance, or yin and yang. Blue Turtle says, side note, many families are forced to sell their gold chains now to get money to buy food. Gold goes higher. SE Asia here.
Oh, really?
Quasar says Eurostocks is slow too, Joan. I like it a lot, even more than ZF smiley face.
Oh, that's interesting. See, I could have bought 09.5 and they went. They're probably going to break the high, right? I don't think that I want to buy that. I don't think that that's where the bid is, but okay. So the E-mini was trying to make a little jump up there and now it's struggling. Axia used to be Futex, right? Yes. You're correct, sir. And Futex went under. I mean, that's the crazy thing was that Futex went under because there was some losses and the guys in charge tried to cover them up.
Carlos Avakian says the guy that made the flash crash was trading with them at Futex lol.
And then the guys that were, successful went out and started Axia. But then you have to wonder if I was going to go and start a new prop firm, why would my main thing be having a room that you can pay for and teaching and everything else like that? Like, why would you want to get the retail people involved? Why wouldn't you just do your trading? Like the whole setup of it doesn't make sense. And I know they show videos of them making money, but man, it is kind of weird.
Bots says equities appear to be generally positive following the 8:30 news cycle this morning.
Yeah, I don't know if your mount might be a little bit delayed, but like, I want to sell it, but I know that current circumstances with my rules, it's probably not the right call. I think there's one trade that I'm making where those qualifications, we can say, I don't think matter, but it's not the one that I could take right now. The one that I was getting was probably a long and I missed. Maybe we'll do one after the open, but I'm also thinking that time period that I was trading after the open is too volatile, and that's why I was having problems on Tuesday.
Blue Turtle says funny story. I helped write a trading book, sold on Amazon. The guy told me, don't tell them the holy grail. Trading books are generally scams. He was a national bestseller. Comical.
Bots says trading rooms, we'd much rather come in here and watch you freak out after you're losing trades, rolling on the floor laughing, rolling on the floor laughing, rolling on the floor laughing.
Well, I mean, that's the thing. I think the reason that we've had the success that we do is because we're honest about it. I don't come in and say I have the holy grail and I'm going to show you guys how much money you can make. I come in and I say I want to learn how to get better at trading, and I'm going to try doing it as much as can and just keep my risk to a minimum. And I think that I have been a lot more successful than many other people trying to do that merely by being honest with it. And now I'm coming down to the point where I'm sitting here saying, yes, but maybe the thing that we're trying to do isn't even possible. Maybe the way that the markets are kind of make the whole exercise is actually wrong. I'm starting to think that Mandelbrot has already proven that you can't, there is no holy grail, essentially. And we all just kind of ignored him because it was inconvenient.
Blue Turtle says he got $150K for 3 books.
Wow, really? That's crazy. Jeez.
Blue Turtle says he gave me 15.
So, because I mean, the thing is I think we provide a lot of really useful, valuable information on this stream. You know, I can pull these stats. I was just looking, I was looking at Futures Trader 71. I really like Futures Trader 71, so this isn't a knock on him. But one of the things that they have is stat sheets for the different products with information about them, such as what their average harmonic rotation is and various stats about the VWAP and so forth that you can use. And I'm like, yeah, I wrote an indicator that you can just stick on your chart that will tell you all of those things. And it won't just tell you what the average harmonic rotation is. It will draw you a distribution profile of it. And people are paying $100 for that. Come here, I will give it to you for free. It's in the downloads in Discord, right? But then I come in and I give you the truth, which is that, well, it's a fractal system, and you can't accurately predict what the next iteration is actually going to do. Then people come in and they say, well, maybe trading's not for me. But maybe that's what I need to do, is I just need to write a book.
Winston's mom says funny story, true story. Peter Navarro wrote a book on Amazon and Jared Kushner read the reviews and suggested him for the administration. He is a China hawk and was warning everyone in memos.
Peter Navarro is an interesting guy. I don't think we realize he He is a trade hawk, and that's why he was put in the administration. He shouldn't be dealing with anything else. I don't understand why they let him touch anything else. But whatever.
Winston's mom says keep a pad and pencil by your bed and write down anything from your dreams that you remember, and maybe the answer will come in a dream. McCartney wrote a song that came to him in a dream. RJ Wheel says how true.
Well, I really think that we should take advantage of some of the information that we get and provide it to people and make money from it without exploiting people. You know what I mean?
Jokel says the Holy Grail is finding inefficiencies in the market and exploiting them. The Medallion Fund shows how profitable that can be.
Well, you're kind of so when you're saying inefficiencies, to me, I think that that's the same thing as what I was trying to say earlier with unexpectedness, right? What is an inefficiency really? It's an unexpected event. And if you can expect the event before the rest of the market does, then you can make money. That's what we are ultimately trying to do as traders. So the reason I've been going down through that is I want to combine something and quantify it, a certain thing that we seem to do intuitively, but that I don't think an indicator exists for it. I can come on here and I can show you this chart and I can tell you, okay, there was a really big order was placed in here and then removed. That's almost 340 contracts added and then removed. Did anybody expect that was going to happen? No, that is unexpected. How do I quantify that was unexpected and how unexpected it was and what the actual impact on the system that unexpected event has? Because we all seem to come down and see things like that and say, okay, this unexpected thing happened, so it might move this far. But how do I quantify that? I can even look at it. I even have our time, like I say, okay, what if we just take the average plus the standard deviation, and then if it is outside of that standard deviation, but then I'll get something like this where like this one triggered and this one didn't, and it's really hard. Like there's probably better math to do it. I know there's a way to do it, but I'm not quite sure how to do it. I know what I want. I want to say, I want to be able to do something that will highlight just this bar. Like I want it to come back and this bar will be a different color because it was so unexpected. But then I want to take it a step further and I want to be able to then go on another graph and say for each event, how unexpected was that event? And then I want to make another graph on top of that says, okay, when an event that unexpected of this nature happens, what is the net aggregate impact on the system? An estimated impact on the system. And then what I want to be able to do is I want to be able to take all of those things. And once I have a number that tells me how unexpected and what is the net impact on the system, then I could aggregate all of those different edges together and I could get something that would tell me, based on the things that I'm watching, how expected or unexpected is the action that we're seeing.
Bots says how do you know you're simply seeing the profit taking from a large order set in motion off the 8:30 news?
Well, it could be. All I know is that that's a big order, and a larger order is not as common. That's all I know. And maybe that order comes in at that time of day every time, or around this kind of action every time. And if you knew that, then you could expect it, right? Oh man, you guys said so many things while I was saying that. Hold on, I've like already drank my water. I'm gonna go and get more water, all right? Okay. How do you know you're not simply saying no? Yeah, I understood what you're saying. Let me try and put it in different terms for you, John. Bots, Mr. Bottomley. Okay. For every bar on this chart, how expected was it? That's the question. That's the question. So we can look at it. Probably depends on what you're looking at, right? So for instance, we could look at the average true range of a bar, right? We could say, okay, on average, bars are this big, and this bar is a lot bigger than what the average bar is. So it's unexpected. Except for that it happened during news, so we kind of expected that, didn't we? So you can expect the unexpected based on which thing you're looking at. If you're looking at only average true range, then there's going to be bars that are larger than expected. But if you're looking at news, you're going to expect that bar. Got right? Okay. So now if I go through and I look at things, so for instance, we've been paying attention to these bars. This bar is larger and completely engulfs the bar before it, which is rare. Notice there's only 3 of those on this chart. I don't see any up ones, by the way. Okay, so when you get a bar like that, just based on how often it happens, we have to say it's less common, it's less expected. Okay. But then my question is, how do I quantify how unexpected it was? Right? If with this bar right here, let's say this one, if this bar ended up going all the way up to here and all the way down to here, that would be unexpected, right? You would probably say, hey, there must be a data error because that doesn't happen, right? How do I quantify that? How do I say this bar was particularly unusual in a quantified manner based on this particular measurement, right? Which is perhaps the range of an outside bar. Okay, so what we could do then is we could come back and we could say, for all of the inside bars, for every bar, is it an outside bar? For every outside bar that we have discovered in the past 5 days, what is the distribution of their range, and where does this particular outside bar fall within that distribution? And we give a quantity that tells us how far away it is from that average. Okay? And that would tell us how unexpected that bar is. With me so far? And then we turn around and we can say, for the next bar, okay, what happened afterwards? Well, eventually we moved up. Sorry, I'll come back to here. Eventually we bottomed and then we moved up. Is that what normally happens? I don't know. You'd have to go and like do a specific back test on it. But we could sit down and say, what's this next bar do on average? And what is this bar doing compared to that average? And how expected or unexpected is that? Okay. And then I have to come back and I want to aggregate those. So once I've quantified how unexpected is this bar and how unexpected is this bar, how unexpected is this bar, in relation to what happens to a bar after a outsized move, what happens to a bar after a bar that is beyond the average true range, etc., etc., and take all of those things and aggregate them into a quantified number that says, based on the edges that you're looking at, how expected or unexpected is any one individual event. So then the key would be being able to identify a bar that's going to have high unexpectedness before it happens. Is that possible? I don't know. But I think that that's what we're trying to do in trading. And what I'm trying to do is I'm trying to like burn things down to the true essence of what we're trying to do. The true essence of it, right? So we have all of these numbers, but there's really a number. There's a more fundamental number that we come up with in our head that says, how unexpected is this thing that's happening, and should I try and take advantage of it? Okay.
Bot says I'm with you, but I'm not seeing how trying to gauge what is or isn't expected or unexpected is as important as recognizing what happens after your unexpected data arrives.
Well, but that's the whole point, right? You're right. No, you're right. You're on the right wavelength. So you're taking it a step further now, right? Because what I'm saying is, okay, you're saying if we have an unexpected event, and then what tends to happen after that expected event, and we're going to use that to try and predict what the next iteration is going to be. In other words, if we have an outside bar and then we break the outside of that bar, that's a pattern. And what does it tend to do after that pattern? And what I'm telling you is that mathematically, it doesn't work like that. The system, a small change in that system can have such a large impact on what the eventual outcome of that is, that looking for a pattern like that doesn't necessarily will never work in the larger picture of things, because what will happen is the market will change. You've changed something in the input, the market will change, and then the tendency of that thing will completely change.
Bot says if you use your cumulative delta as an example. Bot says if you see a large divergence in cum delta, does the resulting move agree or disagree with what delta suggested?
So, does the move agree or disagree with what delta suggested? Yeah, and the conclusion that I have come up with is that you can't know. I've tested this, and when you find a divergence in cumulative delta, does the price or the delta tend to win? And it's random. It's literally 50-50. What's with that? But let's go back. What I'm also trying to say is that we don't want to look for an unexpected event and then use that unexpected event as our entry on the expectation that a certain pattern is going to play out. What we want to do is we want to enter in an area where things are very expected, and we want an unexpected event to happen, and the aftermath of that unexpected event is where we get out. Yeah? It's not trading the outside bar. It's predicting that the outside bar is going to happen. The unexpected outside bar. Can you expect it before the rest of the market? And so I'm just asking, how do you actually do that? Right? I don't know. So then I'm turning back and I'm saying, well, can I even quantify whether something is expected or unexpected? How expected or unexpected is it? Let's just quantify it and then look back at it. Because then I think that what I could do is I could look at this number that it gives me. And I could say, if this number is 0, then that means that the market is doing exactly what everybody in the market thinks it's going to do, which means that you'll never get 0. You should never get 0 unless the market is like closed, right? Then I can come in and I can say, okay, the market right now is showing very, very low unexpectedness. So I want to take a trade now on let's call it a gamble that something unexpected is going to happen. And if I use proper risk management, then when that unexpected thing happens, I will make more money when I'm positioned the right way than I'll lose when I'm positioned the wrong way. So your data mining of that suggests that the people that think they know how cumulative delta works are wrong 50% of the time. No, I mean, I think that what my data suggests is that cumulative delta has no predictive value on the outcome of a divergence. But it does have a predictive value on that something that an unexpected move will happen. That shows there will be opportunity when there's a divergence, but I can't predict which way it's going to go.
Daniel K says, does everyone see the same outside bar?
Well, so this is another problem, Daniel, right? Is that we're limited by time frame, and so you could see something, a particular pattern on a bar that time frame wise, for one time frame is unusual, and then when you look at it on another time frame, it's not. And that's kind of a limitation that we have. And anything that we can do that will kind of show us something independent of time frame is good, which is where order flow signals in particular are really useful. Order flow and volume. Let's see what Wynn's pulled out for us.
Winston's mom says, for a system of particles going off in different directions, the invariant mass of the system is the analog of the rest mass, and is the same for all observers, even those in relative motion. Winston's mom says it is defined as the total energy, divided by C2, in the center of mass frame, where by definition, the system total momentum is 0.
So in using an analogy, and I'm not saying that this is like the way that it is, but I think that a good analogy would be in quantum physics. So when I'm looking at the order flow, if I know that there's a divergence, I can't necessarily know what the direction is. And if I know what the direction is, I can't necessarily know that there's a divergence underneath, right? The more that I know about a particular variable, the less that I know about the other variable. Yeah? So, for instance, the more rangy things are, the less I know about what direction it's going to go afterwards.
Bot says, so maybe you could backtest a different idea. If you see a volume spike on one bar of either buying or selling volume, does the following move agree with the type of volume spike?
Yeah, so that's not, how do I explain this? Maybe you missed an earlier part. Because some of what I'm saying here is self-contradictory, okay? Meow sounds like Schrodinger's cat. Yeah, exactly. Some of what I'm saying here is a little bit contradictory, okay? Because what I'm saying is that if I go in and I do that stat, and I have done that, okay? When there's a large volume spike, the tendency of the market is to reverse probably about 60% of the time. But not when we're strongly trending. So how do you know if we're strongly trending or not? Kind of depends, because some situations you really know it and sometimes you don't really know it.
Bot says if the following move does not agree, could that suggest a trade for you to trade in the opposite direction?
Right, exactly. Now you get it. That's exactly it. So what I really think I'm interested in is, I have an event. Well, sorry, it's kind of pre before that, but you're taking it a step further and then it turns into this situation again. What we're trying to do is we're trying to predict an unexpected event. If I can find an event that is significant to the market, like that there's a huge volume spike or a huge spike in the number of orders placed on the system, and there's an expected behavior that's going to happen after that, but that behavior doesn't happen, and I can predict that it's not going to happen, then you've identified an inefficiency in the market and you could potentially make money on it. Right? So I think that the way that you game this out is, first, we come up with something that would quantify for us, and it needs to be a universal system. You get what I mean? So, like, I need to be able to say, based on the average true range, how expected or unexpected is this event? Based on the volume or the level 2 orders that are being placed, how expected or unexpected is this event? And they need to be able to be compressed down into the same metric called unexpectedness. 0 being everything is expected, and 1 being that literally nobody predicted that it was going to happen. Okay. And aggregate those things together. Okay. And then what I'm looking for is a place where I can predict that a highly unexpected event is going to occur. Now, of course, me trading it is going to change it, but that's why you probably wouldn't want to share this, right? So it could come into two things. One, I can try and predict that volume spike is going to happen. And I think that's what you want to do. And then when the volume spike happens and you're going to move up and you're out on that move, right? But then there's the second set of it, which is that after that happens, there's a certain thing that would tend to happen afterwards. And if that thing isn't what happens, then the market is once again on the wrong side of it. And if you can realize that that's what's happening before everybody else, then you can make money on it again. It's because it's the unexpected thing, right? So it's like going into an instrument and saying, okay, on an inside bar, if they break the top of the inside bar, do they tend to continue afterwards? And then if they do tend to continue afterwards, I want to buy it. I don't think that that's what I actually want to do, because of what I'm actually doing is then I'm saying, oh, I'm getting a little bit of an earthquake. I think it's done. It's still shaking a little bit. It's done. Sorry about that. I'm trying to be cautious with the earthquakes. I don't think that there's any chance of me getting hurt or anything, but when I feel that, like, I'm like, okay, get under the table. Yeah, they keep happening, man. Feeling them all the time now. We're okay. It's kind of weird. It's not like what I would always expect of an earthquake. It feels kind of more like when you're driving in a car and you go over bumps and it just kind of shakes and rattles. That's what it feels like. Kind of freaked me out. Like, my amygdala definitely recognizes it and makes me want to act immediately.
Winston's mom says anomaly discovery, looking for the unexpected or the black swan in a perfect storm. Let's avoid the extinction level events, please.
There's another little aftershock. See, that to me, like on our, let's say that it's between 0 and 1. Maybe 0 and 1 is not the best metric. Maybe it should be 0 and 100. Okay, let's say between 0 and 100 on our indicator called expectedness. 100 is a black swan, which means literally nobody predicted it. But I think there's two metrics, okay? One is the expectedness, 2 is the impact.
Winston's mom says, and everyone please hit like.
Well, we're kind of in a spot where I would often look for a trade, but given that there's an earthquake and we're still shaking, I think I should not.
Bots says honestly, sounds to me like you're overcomplicating some pretty simple concepts.
I don't think I am. I think, well, for one thing, what I'm trying to do is I'm trying to get down into the essence of something that I think that we all do in our head. So we sit down and we say, how expected or unexpected is this event, and what is the impact on the asset that I'm trading? And then you use that to determine whether or not you take a trade. And if I can quantify that, then it would be easier to make decisions, maybe. But there's this other side of it, which is that aren't we all doing that anyways? And yet, most retail traders don't make money, right? So when we come in and we say, you backtest something and you try and predict what the behavior is and then develop an expectancy and trade it a certain way based on that expectancy, I'm not so sure that that approach works. I'm starting to think that there's something fundamental about the math that makes it so that that will never work long term.
JB says, funny, I was thinking that as well given I heard he scalps. But did not want to be rude as I am newer here.
Fine. No, cool. I got that thing. Yeah, I wanted to make a trade, but now not anymore. Maybe at 8 in the 10 o'clock hour. Oh.
JB says, I was referencing the overthinking comment.
So part of this is where I just have bits and pieces, right? So I think that the thing to take it through first. So for instance, MACD. I think this MACD that I have is a good example, right? The further away this is from 0, the more unexpected it is. Another aftershock. Right? That's what this is showing me. And I could make the same thing for the average true range. I could say, is the bar above or below the average true range, and by how much? And I would have to do a mathematical thing to say between 0 and 1. How do you quantify that 1 is literally nobody expected that? I think that what it would mean, I think that I would have to have a component of volume. So if there was more volume than the sum total of everybody's positions, then that means that literally everybody in the market had to react to that event, and then that means that that was a 1. What we're trying to calculate might not be something that we have the technology or information to calculate, but we're gonna try.
Winston's mom says no, everyone does not think or feel alike, and that's the idea behind Jungian typology and MBTI. It takes a village, and 70-ish% of people are sensors and do not have pattern recognition, front stack.
70% of people don't have pattern recognition? Well, there was a pretty good short right there. No, I really shouldn't take any trades because, well, I'm not even going to take a sim order, right? Because the chances of like something happening and getting cut off in the middle of a trade or something is a little bit high, so I should not touch it.
Winston's mom says JB, I think they can take it. I have observed these young gentlemen who trade poke prod and sometimes bully each other, but it's always in good fun.
Certainly look short. I don't think the now is a really good location, but look at the treasuries. Treasuries came back. So I'm gonna take one here. Oh man, I already jumped on me. Well, that's okay. Oh, I pretend that I went in at 0.5, okay? Pretend.
Michael XC says it's tacky, but even worse associated with that Hillary. Michael XC says sorry to be negative.
No.
Winston's mom says I did also, Michael XC, but it's a rather universal phrase and translate well in a global online community.
She took it and really distorted it. I totally understand how you feel, Michael. I get it. Okay, so another 4-spot 2 in Magna. Should we go? We should put in the live stream another earthquake.
Maxwell Silver says just coming on, why is the market up?
I mean, is it really? It's they're selling it at the moment. I suppose that we were above yesterday's close, but yesterday was a down day too. So I think, Maxwell, that we're not the market has not done anything conclusive yet.
Michael XZ says I.
So we had on Tuesday evening, we had a 4-spot 2 quake in that same spot. So now it's the second one in that area. It really makes you wonder if like a bigger earthquake is going to happen in Utah because we keep having these relatively
Michael
large
XC
ones.
says I'm not convinced S will end the day up. Jobless numbers were in line with expectations and usually they should be much worse to drive it higher. Slightly smiling face.
Well,
Maxwell Silver says thank you for your answer. You're smarter than me. I like that.
I mean, I'd like to think that I'm smart, but I don't think that I have a higher IQ than the average person. I really don't. If I do, it's going to be like a 105 or something. I'm not significantly more intelligent than the average person. I've just put all of my energy into different things. So I just kind of know. Yeah. We haven't broken outside of yesterday's. We're inside of yesterday's range. So it doesn't really tell us much. Man. I don't know what I did, but I'm like, now I need to pee. And normally I don't ever have to do that during the stream. I usually don't have to get water either, so something's up with me today. I'm just waxing too philosophical makes me thirsty, I guess. I'll be right back. Okay, I have a better explanation here for the unexpectedness thing. Okay. I have a setup, and I've backtested this setup, and I say, after this setup, 60% of the time we tend to move up afterwards, and 40% of the time we tend to move down afterwards. So Bots was saying, okay, so what you do is you say, when the thing that you expect to have happen doesn't happen, then you trade it the other way, and that's the trade. Okay, but if you are trading it the other way, isn't that an expectation? Make sense? If I say 60% of the time it tends to move up, I expect it to move up. If it doesn't move up, then I expect it to move down. Right? That would, then what I'm doing is I'm just taking another iteration and saying, okay, another iteration, X didn't happen, so Y should happen. That's still expected. So the unexpectedness of that subsequent move is not actually that high. It's higher than if we moved up,
Michael X.
but it's
Siege
not
says,
actually
I think
that
the
high.
market doesn't know what to do after these inline numbers.
Yeah, I don't know. Well, the thing was, I think that with this particular move right now that we're seeing, that the market moved really strongly on the jobless numbers for no reason, I feel. They traded like it was unexpected when it really wasn't. And so then what do? They reverse and they go in the other way now. I wish there was a way. See, I think for the metric that I want, I need to know net positions. This is always the issue, and everything that I'm always thinking through is volume's not enough. I need to know how many people have open positions. Well, it's going down pretty hard, but there's still got like 2750 below us, so I kind of let them do their thing for a little bit. Maybe a little pullback there. I can see that the tick came back pretty hard on that one.
JB says looking for open position on the fly or weekly, as I think there is a weekly report out there available.
I want to do it on the fly. Yeah, I want to be able to come in and say, before this piece of news, how many people had positions? And after this news, how many people had positions? So that I can calculate what percentage of the market had to react to that news, and therefore calculate how expected or unexpected that event was. Expected or unexpected being a measure of the percentage of the market that expected it. In order to know the percentage of the market that expected or didn't expect it, I have to see people's positions. So we don't get commitment of trader reports every 5 minutes, right? So maybe there's a way that we can estimate this. Like what we could do is we could look through the volume during the day and then estimate what percentage of that actual volume translates to positions held overnight. And then use that to determine which percentage of the market is scalping for a certain amount of time. Well, they just keep pushing. Mighty fine down move so far. Pretty big down move, the down bar too. Like on a 30-minute basis, I think this is one of the longest 30-minute bars we've had all week. Another way we could look at it is maybe
Winston's mom says CFTC.gov has an article written in 2017, Trader Positions in Market-Wide Liquidity Demand Ace and Honor, John S. Roberts, and Tug Cantusan Abstract.
I think I may have actually read that before. I think I've come across that and it didn't tell me what I wanted
Michael
to see.
XC
So
says news anchors were actually calling it perverted that the market was up on bad jobless numbers before.
Wow. This whole thing, like, man, I just keep, I must be on a one-track mind because it just goes back to the thing that I'm saying. Is you want to sit down and say, we put in a certain input. The input was jobless numbers. And the market is supposed to react a certain way. You're trying to look at it as a Newtonian system, and it's not. The world is not a Newtonian system. It's a fractal function. You put stuff into it, it changes everybody's expectations. That affects the next iteration, and so you have a huge change like that.
Winston's
how the
mom
market's
says
going to react to it?
DePrado and O'Hara 2016. They developed a bulk volume trade classification and show that this measure can detect informational trading better than order flow.
Yep, I've definitely read this one. I wish I could remember. I wish I could remember that they develop a metric that's different from just volume. Essentially, it's still an order flow. I would still consider it a methodology of order flow, and it's not really one that we could really calculate or would be useful for us on our time frame. I definitely remember reading this. Anyways, you put a certain set of inputs into the markets, and they're saying when you put this input into the markets should move down. And I'm saying because it's a fractal system, you can't predict it without actually playing it out. And what happened was we played it out. We traded the information. We got the news. We traded in the market, and the market moved up. So the news is wrong for whatever reason, and I can't explain why.
Winston's mom says assume that there is a risky asset with zero net supply and that there are two types of traders, noise traders and liquidity providers.
Yeah, and then there's a formula. I won't read that one out because that would be hard to read. I've definitely read this before. Oh, I don't have Discord open. Man, dogs really want out. Okay, there might be a flip here. I'm seeing them kind of try and take it. Okay. Well, that definitely did something to him.
Winston's mom says, do the animals respond before an earthquake? Do you notice any odd behavior from them? I know Ponce Ferret was frightened of lightning, but none of mine now respond to weather.
They don't seem to act like they care, to be honest. I get everyone's trouble of figuring out where the stimulus payments are, and I'm trying to give as much info to as many people as I can, but as I've said it before, please, please, please do not email your social security number and date of birth to me or anyone else. Says Richard Rubin. Oh, because some people want their stimulus checks and they haven't gotten them yet. That's funny. North Dakota Governor Burgum issues guidelines to reopen state on May 1st. Hmm. Yes. No. Okay. I'll be right back. Okay.
Michael XC says, what's the subway dinging from?
The subway dinging is from the E-Mini crossing my line. So at that point, you're either going to have a reversal or you're at the peak of a pullback. It does look like my trade in the 10-year that I wanted to make, but I said let's not do it because there was an earthquake, would have worked out. Well, they moved down another clip after our last thing, didn't they? Interesting, the 10-year is not behaving the same way that it did yesterday. The pressure is unquestionably on the offer side for some reason. Oh, because there's this huge order up here. That's why. Okay. Man, well, but that's at 16, so I don't know if that one matters. So there was the ding again, right? This one may actually turn up a little bit. Yep. The UK government is in talks with a number of biometric firms to design COVID-19 immunity passport. Jeez. Immunity passports, come on. I'm getting into ridiculous territory with that. I'm not so sure that the societal consequences of immunity passports will be a positive thing. Well, there's a long, but it's not quite going. Gotta wait a little bit. Okay, so it was turning up. It's coming back to pressure. This one may actually be a long. Yeah. Well, they went up. I think that one would have been okay. I don't actually know what it does from here, so. Jaeger 10.
Jaeger 10 says aftershock just happened.
Yeah, we had that. You're talking about that 4.5 or whatever? I felt a lot of shaking afterwards. I'm sure they were going to get another shake that I'm going to feel, but I think that we're safe. I wonder how long this is going to go on or if we're going to have
Jaeger
a big
10 says
earthquake.
yeah.
I don't think that we're going to have a big earthquake like today because normally,
Jaeger 10 says in Salt Lake.
yeah,
Pretty Iced Tea says 4.2 again.
it was pretty, it wasn't as bad as the first one. It was like that one on Tuesday night, right? Just kind of like shook things, but it didn't really. Like when that big one happened, there was like a crash. Look, I just feel it right now. Just right there, 8:20, 8:21:30.
Michael XC says you guys actually pay attention to earthquakes less than 5?
Well, I felt it. Shaking right now. It may just be confirmation bias of sorts that because we're paying attention to earthquakes, now we notice it more, but it sure seems like
Michael
something's been
XC
happening,
says
right?
there were some tornadoes somewhere recently.
There was some down south, right? Which is highly unusual, but can happen. Has happened, rather.
Michael XC says possibly Alabama.
Still going up. Just do crimson. Dun, dun, dun.
Jaeger10 says, why do pets act crazy before earthquake?
I don't know. Mine haven't done anything interesting. That's weird.
JB says, I think they hear or feel the ground shaking before we do.
Something wrong with this bars. Oh, I see. It's still going up. Maybe I should have just taken that one. I kind of thought that they would take them longer. There we go. That's better.
Jaeger10 says, so what is that graph for?
Which graph? The one at the bottom right?
Jaeger10 says, yeah.
Yeah, so that is the S&P 500 futures. So the stock market as a whole is moving up right now. They're right about where the extended session open was. Pretty steady delta upflow. But Treasury's moving up again. Weird. Nothing interesting in the dollar. We did touch target of sorts. 27.52. Well, just barely. Come short. Wow. If they really go up, they could like really, really go up. Crude. Oh, it's below $20 today. WTI crude falls into negative territory on the day. Forex Live. First squawk. Brannigan Barrett. The VIX is at 42, the 10 years at 58 basis points, and the euro Japanese dollar is at spot 49. You have been warned. Risk off imminent. The only thing holding up selling is a handful of tech stocks, says Brannigan Barrett. So when he says risk off, he means they're going to move down. It's got to be more than just a handful of tech stocks, Brannigan, because the tick is like 300 right now. It is higher. I see. The VIX is higher than it was yesterday and the day before. Hmm. Yet they move up. Well, that uptrend is a little fishy. See that to me. So that to me is unexpected. Why is the trend so clean up? Extremely odd.
Bot says not that odd. Bot says it's the 10:15 to 10:45 counter trend period.
No, the cleanness of the move, it's never that clean, man. It's never. I don't think I've ever seen such a clear, smooth line. The fractal dimension is literally almost 2. Darn. Yeah.
Maxwell Silver says exactly.
So a fractal dimension indicator of 2 means that the self-similarity of the E-mini over the past, X minutes or whatever is almost 100%.
Bot says new hour starting on the half hour here, reverse or continuation.
Yeah, so it's extremely unusual. It's almost a completely smooth line. I don't know if that means that we should reverse it on that alone. I'm just taking the signal that it gave me here in a spot where it's questionable, but I can take it. Hmm. Well, we're in a pretty heavy distribution area right now. See, they can't seem to push below 68. Hmm. Darn. Mm-mm-mm-mm.
Twemdog says time to buy now.
Well, probably at 70 would have been better, but yeah. I was wrong. I'm like, the area that we're in is like so closely on the edge, though, right? Like, we're still basically where we started at 8:30. Okay. Damn it. How did I end up getting 66.25? What the hell? That was bad. I don't know about this spot, man. It sure seems like they're doing something here, but it's not going, and I'm not seeing the big orders come. I don't think that this makes sense.
Winston's mom says, have you considered buying stocks in companies who invest in video conferencing capability? We may all find it's much nicer staying home and working from here.
Citrix. That's why I was mentioning Citrix earlier. I think Citrix is your best stock for that. I think that their technology is the best. That and Zoom got, decimated.
Winston's mom says, breaking news. We are out of small business money, says CNBC. Michael XC says Zoom went from 10 million monthly active index to 200 meters. Glitch MGE says, I like that massage though.
I see. Probably too late. I'll try anyways.
Winston's mom says CNBC analysts are saying to buy stay-at-home stocks. So, that's what we're calling it now.
The problem is those are the ones that are going to be already up.
Glitch MGE says, in New York I Millie Rock. Luis Alarid says, good example of stay-at-home stock NFLX.
Well, there you go. But again, those are all like up. After only 13 days, the PPP is now officially oversubscribed. My sense is that there is greater than $1 trillion in demand. Following discussions with our SME client space, Congress and the administration cannot act fast enough. Greater than $1 trillion. I mean, is there a limit to how much money people want? Yeah, right? Well, it just keeps trending up. Obviously, because I'm not buying it. But Treasuries did come back a bit.
Winston's mom says, and Heinz, I think we all know we will be eating a lot of shake the ketchup bottle. None will come then a lotta, lol. Ketchup, fingers crossed, will still be available in months to come.
Okay. Probably, yes. No food shortages. Again.
Michael XC says, not that important, you can always use vinegar like the Brits.
Even through this up move, I'm not really seeing the volume.
Winston's mom says, all kidding aside, with my favorite food rhyme, I do see Heinz is suggested as a good stay-at-home stock.
Okay, down sweep. Volume at 2775.
Winston's mom says, I like vinegar, Michael XZ, and I really like fish and chips. Vinegar is a good thing to stock up on. Multiple uses.
One more sim order we'll try. Buying, selling the bottom. Once again.
Winston's mom says, speculator Seth, you are so lost in designing your new system and in thought that you look like you are about to fall asleep.
Oh, just really focus on what it's doing. And the trade's not working out, so obviously because I'm trying to short, right? Okay, well. Where's this area here? They're still kind of inside of it. I'm hearing a lot of clicks though. So the treasuries are definitely reacting to that. Right there at 74, is there an iceberg at 74.50? I don't see anything obvious, but it's like they just swept right through it. Well, Cable is having a look at the session low into the fix. Trump administration is expected today to weaken regulations on mercury and other toxic metals released from oil and coal-fired power plants. Really? Well, they came back down to that bottom really easily. They haven't pushed it further yet, but now there you go. By a tick. $71.50 is the number we're looking at. Hmm. Difficult read at the moment. It doesn't look like they're ready to go yet. that one worked really well. Well, they look like they're ranging up here again. I clearly see the uptrend, but I am not seeing the strong, the volume that I would expect to accompany a move like this, if that makes sense. It's just not quite there for some reason. Hmm. He does it again. Continues to behave very much counter to my own expectations. Was some aggressive selling back up there. Darn. That just runs away from you so quickly, right? Hmm. Wow. Okay. He's gonna give it up that time. Wow. Okay, so here comes the open. So you definitely would expect to see some profit taking around the open. Hmm. I forget. You guys are probably saying stuff and I miss it. Anyone snag a Trump check yet? I had stuff deposited. Direct deposit. Didn't get a check though. Uh, Smash the Bid says do the opposite of whatever you think. I've been I try to do that too. It's not that. I think in this particular situation, the only thing that matters is that the trend is up, right? If you've been taking longs, then you probably have made money. And if you weren't, then you probably lost. The question is always trend or no trend. Hmm. Kind of makes you wonder. Could we push for new session highs? What if we went up to 28.15? Well, that's still a long ways off. we did get a little bit of like, hold up. So we'll see. I've seen this go both ways. Like just this exact situation, we've had days where they completely went through the line and then extended all the way on the other side. And I've seen other days where they came back to the open and they bounced off it and they moved back down. And which one we're having today, I don't know. I mean, there's definitely something weird going on in the markets. But look, the treasuries came back almost completely to where we were at the beginning of the session. So at least they're not any more panicked than they were at the beginning of this. Man, one of the things is when the buyers make something, it feels like they're cheating. You know what I mean? I think they will manage to eke out one more stimulus check for most of us. We'll see. I have some proposed. We receive a monthly check for this entire year. Well, I remember if you're unemployed, you're getting the money. I think a lot of people were saying, oh, these other countries are getting more stimulus than we are. But it was really just their unemployment, and we have unemployment too. But you didn't hear that in the headlines because the unemployment is very specific to which state you're in because the state administrates it. But the government is still giving you money if you're unemployed every month or every week. The Democrats were proposing to give everybody like $2,000 a month or something like that. I just not so sure that that's the right thing. This is like a Gunlatch. I think is a little too dogmatic in some of his beliefs, but I think he has the right idea on one thing, which is like when everybody gets bailed out, nobody gets bailed out. I remember there was this whole thing from the last time around in the last crisis that they were talking about zombie companies that really shouldn't be in business anymore. You know? Yeah, I heard $2,000 a month. Yeah, it was $2,000 a month was what the Democrats proposed in their legislation. I really don't think that that's going to happen. I'm frankly surprised that the Republicans did the stimulus that they did, especially since in the 2008 crisis, George Bush had a stimulus like that and nothing came of it. I think that there's the potential for something like that to have a really stimulative effect on the economy, but that most people will waste it and that it won't have and that it won't change much. But we'll see. I don't really know. We're in such an unprecedented situation that probably our probability of being able to predict the final outcome of all this is pretty low. Huh? Seth, how do you update NinjaTrader contract dates? You go to your control center. I don't want to stop looking at this. Hold on. Okay. You go tools, database management, rollover instruments. Yes. And then that'll roll over our oil. Oh, so earlier I was saying oil is down to 20, but now I'm noticing they actually moved up a pretty good clip overnight and they're at 25. Because I hadn't rolled over yet. Bot says the version 7 or 8. I guess it depends on whether it's 7 or 8. Just thinking back on these trades that I made, when I started taking the shorts, it was okay, but then I kept doing it, and I don't know why. We're actually getting a decent amount of sell pressure now. See that? That's actually quite aggressive. 15, huh? See, it's like the seller tries so hard and he gets that, and then the buyer comes in and it just like easily goes for him. Like he's cheating. It looks like he's cheating. Not cheating, but he just has a lot more money, you know? There's a down sweep. And they move up anyways. Okay, well, the book looks neutral at the moment now. What the hell? The US dollar rallies into the London fix, then continues run. Oh, yes, I see that. Is that this whole counter move? For the most part, yes. Okay, well, that's the first thing we've had in a while. Okay. So we're seeing some crazy volume come in here around 10 minutes before the London close, and I do tend to see interesting moves around this time. That's a little bit more aggressive than I've been seeing. I'm sure that the London traders must be battling something out here. So look at that. Okay, so there's some, like all the pressure is sell all of the sudden, but it's not very strong. And then the buyer comes in. Well, there's definitely some resistance here, man. Okay. There was a few stops on that. We are again. Trudeau says candidate to roll out commercial rent program covering 3 months of rent. Will have details soon. Commercial rent. That's Bostic. Important to help save as many businesses as we can. There's just so much volume trading in the open. Whoa. Click. Bid pulled in the 10-year. Pretty close too. That's not. That could be a lure, but suggests that they're going to turn down in the Treasury. They didn't like the E-mini moving up like that. How are you guys doing? I know I haven't been reading comments. I keep forgetting that it's not going to read out everything to me. What does that sound? Fasten your seatbelts? Yeah, basically. No way to get on the subway. Did they have that sound on the subway? I made it because it sounded like a flight attendant bell. When I was going through and I was making sounds, and I was like, that sounds like a flight attendant bell. I'm going to use that. It has to do with if you look at the chart on the bottom right hand corner, if you cross the green line with certain circumstances, then it will play the sound. We're fine, speculators. That's just chatting amongst ourselves. It sounds like an elevator door stopping to me. It's a pleasant noise, isn't it? It's a pleasant and interesting noise. That it stands out and that people ask me what it is just says that I got this, that I picked a good sound. I heard some European finance minister saying if all problems are solved, then there could be 5% growth in 2021. Wow. But is that 5% from the projected 35% decline or 5% from now? I think what they're saying is that you'll get like, well, no. Okay. So if you had 5% GDP growth in a year, that'd be amazing. That'd be great. Anything over 3% is good. So he's probably right. Well, I think they will definitely have some quarters that will have some crazy amount of growth. But is the economy overall going to increase 5% next year? Like aggregate this year, next year, it's 0, and then the year after that is 5%. Maybe. But you're still behind, right? You're still falling behind the curve. You need like 6% to really make up the room. That makes sense? So the 5% is not actually that big of a deal. You're still lagging behind that GDP curve that used to be 3% every year up until the 90s. Okay. 1 minute to go to the close of the European session, right? Hmm. Ten seconds. Okay. Well, it's been over an hour now. That last hour was incredibly positive. When do AM auctions expire? Like what time in the morning? Oh, that's, I have no clue. Maybe the open? Oh. Did it now? $91.50. See. Should have gotten out a long time ago. Okay, well, anyways, 9:30, so I should shut things down. It's kind of getting mixed results, guys. I don't know. Of course, a lot of that was my bad, and I did catch a really good runner, but geez, I don't know, man. All right, well, I'll tell you what, I'll catch you tomorrow. In the meantime, stay profitable.